CA to take us through the audit track. We will start today's proceedings with the introduction of the CA. As always, for the CA, as a matter of respect to our audience.
यशस्सुप्तेषु जागृति यशस्सुप्तेषु जागृति पुरुषो निर्विमानः तदेव शुक्रं ब्रह्मा
The speaker for today is A. Uttamshen Ji. He is a BCom graduate from AMJ College, Chennai. He is a fellow chartered accountant. He is in practice since 1996. He is the founder partner of UCJ and Associates. He is presently the managing committee member of Chartered Accountants Circle, Chennai. Had also held the position for 2 terms of 3 years. He has been actively participating in revision of the publications of ICAI, statement on peer review, practitioner's guide to audit of small entities, guidance note on bank audit, guidance note on tax audit, direct tax portioning guidance note on internal audit, etc. A guide to tax audit co-authored CAT on 2 editions published by Chartered Accountants Circle. He has presented papers on bank audit, tax audit, income tax matters, Tally as an audit tool at SIRC and its branches and chapters. He is also the trainer for Tally special classes for Chartered Accountants, an initiative by Tally Solutions Private Limited. He is a faculty for SIRC for ITT, Advanced ITT Training Program, etc. He is a life member of Bombay Chartered Accountants Society, Mumbai. He is a life member of the Chamber of Tax Consultants, Mumbai. He is a life member of the Chartered Accountants Circle, Chennai, life member of International Chamber of GST Professionals, and member of Association of Chartered Accountants, Chennai. He is the first generation Chartered Accountant. His eldest daughter is also a Chartered Accountant in practice. With this brief, I have great pleasure in presenting before you Uttamshen Ji, sir, to take us through the audit. Over to you, sir.
Thank you, Rahman. Respected chairman in absentia, all the office bearers in absentia, all the council members in absentia, and dear members, good evening to one and all. The subject seems to be interesting but not interesting. People think that this is relevant, but it is too early. Actually, it is too late. It is too late because I have been propagating saying that this program should be conducted in the month of April itself and it should be widely held across South India. But I don't know why this has happened. We have not conducted major programs on this. Majority of them have not conducted, not only this organization. Many of the chambers or even corporates have not understood the nuances of this particular audit trail which is there, which is going to have a big repercussion. People are thinking like what one of my colleague in the afternoon when I was just talking to him saying that I am speaking on audit trail. Trailer dhanappa. I said, how come you are comparing with that? Say in a tractor the trailer goes behind. So you have to now go behind, you are the trailer now. You have to go behind the companies and corporates and the associates, telling them that there is an audit trail and you have to do the audit trail work. So we are all going to become trailers, running after the associate, telling them that this is relevant, this is relevant, this is relevant. But how we are going to cope up with that, that's what we are going to see. How we are going to look at it. Audit trail is a scenario which is going to create a lot of repercussions in the near future, with all the entities on you looking after, saying that you have not done your work properly, documentation which you are able to prove it, all that will come. And this audit trail itself has come because of some problem somewhere, and the government thought it fit to bring in for all the corporates, irrespective of size, irrespective of number of people, irrespective of the activities. It has been brought for all. The audit trail is going to create a big impact on all the financials which are to be signed on or after 1/4/24. It is going to have the repercussion. What you do makes a difference, and you have to decide what kind of difference you want to make. This is becoming very relevant in case of an audit trail. What is the difference you want to make? How you want to make the difference? And as a chartered accountant, as an auditor of the corporate, how you are going to bring in that particular difference visible on the clientele. This is my pet slide. Whichever program I do, whichever activity I do, this is my pet slide. Any activity can be broken up into 4 parts: destination, source, process, documentation. And this normally I even talk to the students and ask them what is the, so in case of an audit trail, what is the starting point? Can someone throw light? What is the starting point in case of an audit trail? So that is what the activity which we are trying to think of today. Audit trail is the thought process which we have today, saying how we are going to impact, how it is going to be impacted. So what is the starting point?
Reading the entry.
Reading the entry.
Identifying the books of account.
Identifying the books of account. So you are going to the process or the source. Actually, the starting point is the destination. The starting point is the destination. I want an audit trail. So if I want an audit trail, what is that is required? I have to understand it. So that means I have to go to the source now. From destination, my destination is implementation of audit trail, edit log. I have to have that edit log. I have to have the audit trail. The 3 parameters which they are talking about in the notification, the amendment which they have brought in, all the 3 whether have been captured or not. As we go forward, we will be looking into what all that is required. Now, but that is the starting point. Then we go back to the source. Now we go to the source, who is passing the entry, what is the accounting software, how it is there, and then there is a process. Okay, this is the software, this is how it can be implemented. Take for example, if you are going to have a SAP, you cannot implement it yourself. So you have to have a process person. You have to have a process person saying that this is what is going to be implemented. And when that is going to be implemented, there should be a documentation for that. So that is the process which is going to happen, saying I have to document how my implementation is going to happen in the software, what is the pros and cons of that software, how that software is going to be helping me in implementing the audit trail. What is required in the audit trail, how it is going to be implemented. It can be Zoho books, it can be Tally, it can be SAP, it can be Naviation, it can be any model software or off-the-shelf software or made-to-order software. It can be any software. But unless and until I understand my starting point, I will not be able to implement that particular process. So my starting point is audit trail, how the audit trail has to be implemented, and from there I go to the source and then find out what is the software, whether I want to change my software now, because I am doing in a pirated software. I am very small company, I have only 2 people. So whether that is required or not, that is what we are going to now discuss and understand. Say I have only 2 employees. Only 2 employees who fits in, I only sit here, but my company is a corporate company. And my mind says that in near future, this audit trail will come under GST law, will come under also income tax law. So in other words, it will be on all the associates, this audit trail will be available. Why they want to do this? Any reason why they want to do this?
They want to know whether any entries are inserted,
Deleted, modified, because even the borrowers are non-corporates now. There are big LLPs. There are big LLPs doing borrowings. There are big non-corporates who are borrowing funds, and then that are forensic audit are going on. So they want that also to be tracked. So whether these are being tracked, whether these are there or not, all that we will try to understand. And then when you implement the process, the entire process, we can be part of that process.
The tracking of the entry is the only objective, sir, or any other objective?
As we go forward, we will be looking into what are the objectives, what is the intention, and this should have been the objective of the company. This should not have been the objective of the corporate or the company law or the minister. It should have been the, like what you see in your departmental store. They want to have the control. So that should have been for every corporate, and they are intended to do that. But in the process, there are some problems. So today's agenda, we have to understand what is audit trail. We will be understanding what is audit trail, what is the requirement of audit trail, how it has to be looked into, what is the legal compliance requirement, understanding audit trail in general and audit trail in legal compliance, what is the law which is requiring it to be done, and audit trail in the accounting software, how this is going to be implemented in the accounting software, what is that they want in the accounting software. And just for example, I have Tally as a software because this is very easy to understand how the audit trail should look like, how the audit trail should be there. Because how many of you have done bank audit? Bank branch audit? How many of you have seen your statement? Bank statement? How it is generated? Does it come from the software? At least bank statement comes from the software. There are many more reports which doesn't come from the base software. This is only a data bank. And the software is something else. Even the parameters are created in some other software. And then there are the interface between those softwares. And when there is an interface happening, when I am talking from here and you listening from the other side, it can be tampered with. So we have been doing audit, bank audit we have been doing, and we are getting reports in the text file or Excel file, which that software doesn't throw out at all. That software doesn't throw it out at all. For example, in Tally you get in Excel, you get in PDF. There are some software which gives in text file, but that text file can be tampered with without we even need touching that. It is possible. Even I will not touch it. So that's the reason why they create something called edit log. A log is getting created whenever you generate a report. A log will be getting created automatically, and that log will tell that this file was generated on this time, this was opened on that time. Now what I can do is, even that edit log I can write in different language, so you will not be able to see. Whenever you open it will show only special characters possible. So there are various means and methods in which a tampering can happen. So we have to understand that how it has to go about. Like for example, in your audit they say that you should get external confirmation even for a bank account. Now what happens if the bank account is not, the banker is not given you, they are not mailing you directly? What is the alternate you have now in today's scenario? Yes?
Bank statement.
So even in front of him, you have to do a documentation for that. You have to create a minute saying that I sat with so and so sir, and they opened it in front of me, they have downloaded it and they have mailed it to me. You have to do the documentation for that also. So that level it has to go now. It has to go saying that it was downloaded in front of us, logged in at this point of time, this was the download which has happened, and that download, the process also to be documented so that it becomes a Pakka document for you, saying that you have taken that as an external document confirmation. So what are the prerequisites for audit? Because Tally, it will help you to understand how it is the prerequisites which are there. The same prerequisite applies for all the softwares. And the pros and cons of audit trail. What is the positive of audit trail and what is the negative of audit trail which is going to happen. With that, we will move to the understanding the audit trail and impact analysis. What is audit trail? In general. From the source to the destination, entire tracking is available. How the movement has happened. So it is a step-by-step record of accounting trade details or other financial data be traced to their source. I am not talking as per Companies Act, I am talking in general. In general, audit trail means a step-by-step record of accounting or trade details or other financial data which can be traced to its source. So I can go from my balance sheet, I can go back and find out how this has figure come, how this figure has been arrived at. I can go back and see step by step the entire thing. This is already available in most of the softwares, but the problem is only tampering with it. So it is a sequential record detailing the history and events relating to the specific transaction which has happened, or a ledger entry, or it can be even a balance sheet entry, or it can be even a profit loss account line item, how it moves from, or it can be both ways. For example, I take an inventory and this inventory is sold, and I can track from the money which has been received from my debtors. I can go back and see for what I have received this money, that particular product, where it was kept, when it was moved, from where it was purchased, and I can go back and also find out what was the purchase order which was given to them, how the goods had come, when it had come, the entire sequence, to and front and back I can see. That is what is the entire record keeping which has to be seen. What is the implementation guide? There is one particular publication which has come from ICAI. In March 2023, it had come. It had come in March 2023 saying implementation guide to audit trail. The implementation guide also talks about in the glossary what is audit trail. Audit trail or edit log is a visible trail of evidence enabling one to trace information contained in the statement or reports back to the original input source. So it is not just one level, it is to all the levels from the input till the output. Entire sequence has to be captured and it should be visible. Audit trails are a chronological record of the changes that have been made. This is more important now. Chronological record of changes that have been made to the data. They are not saying that only the captured data, even the change which has happened in the data, that has to be captured. Any change including creating new data, updating, deleting, modifying, changing, maybe part, maybe full. Now when you read the law is not very wide. It has been open-endedly said. So any change from the source to destination, is it only to the record which is going to the balance sheet, or it is to the other information which are there in the record?
Sir, it relates only to changes, not the original record.
Without original you cannot do the changes. Without the original you cannot do the changes. If I have something original, if I have something change, then I can compare. So that is what they want. So even if you don't change it, the record will be available. The tracking has to be there. The tracking has to be there from the source till the destination. Even if there are changes, that's the first part. The second part says if any changes, deletion, renumbering, changing anything, parts or in total, anything which is changed. Now the question which will come to our mind is, there are changes which are not affecting my balance sheet. Take for example, a ledger I have, the ledger address is wrong, I have changed it. Or the ledger GST number has been changed it. Now whether that is also to be covered or not. That is also to be recorded and kept or not. As a software engineer, I will say yes. But as per the law, it may not be. But when it comes to the definitions which are there, you will understand that even that is to be recorded and kept. So what are the pros and cons of audit trail? First we will see the pros. It encourages accountability and compliance, because when it comes to changes, there will be someone accountable. If I have been passing the entry, he has changed it, he will be accountable why he has changed it. So the accountability will come in force, and the compliance related to various other laws also will come in place. It will maintain a functional economy. That is the purpose of the entire audit trail being brought in under the Companies Act itself. Because the economy is getting affected because of the various frauds which are happening. So those frauds will come down, will be substantially reduced. It's not that it is going to be stopped, but it can be substantially be reduced. The frauds will come down, the chances of fraud are lesser. Take an example for a fraud which can happen in a normal scenario is, in his office, there will be someone preparing the billing. Correct? So he comes there, he takes a bill from him, gives his GST number, and he takes the bills and goes off. I follow the same person, I go to his office, I know him personally. So I want some saying that I want to make a reimbursement bill. Like we go to a petrol bunk, we ask for a bill is given, no one is asking for why you want. He understands that he is for reimbursement, so he will go and take a reimbursement, I am not going to get any loss. So what he does is, he changes the name and prints the bill in my name without giving my GST number. So it is B2B for him, B2C for me. And I take the bill, I produce it in my office, get a reimbursement. So this kind of frauds can happen. So what are the consequences for this kind of a transaction? When I take a GST scenario, this will all land up in all the three saying fake bills. Though they are genuine transaction, because of my transaction, all the three will be called as fake invoices. He will be hauled up by saying you are giving fake invoices. He will be hauled up for saying you have taken an input for which it is not a genuine, because this bill is belonging to me, and today I have not taken the input, so it's a win-win situation for the government. Not allowing input to him, penalizing him. So that's the problem. So if I am going to stop this, once I put a stop in the software saying that the bill will be raised, once the bill is entered, it will be printed and no one can take a second print of it. So no one can modify, no one can take a print of it. So that kind of a control I can bring in. So this will improve the security. When I stop people from looking at my data itself, once entered. For example, if I am a sales counter guy in the institute. In the institute, publications are sold. I don't know now today is there or not. Earlier it was there in the ground floor. The counter is there. What they do? They sell the books against what? Only cash, nothing else. Correct? No exchange, nothing. So I can prepare a software where they will only punch in. They will only select the book name or the code number and the print will happen. That's all. He has to only say pick and then he has to say number of quantity. Automatically the GST, if it is applicable, all the legal provisions are applicable can happen. So I can have a secure data and secured scenario saying that nothing can go wrong. Though I cannot blindly be lying there, but in general there will be nothing going wrong in the transactions which are happening. Now coming to the cons, time is one factor which is going to affect it, because when you are going to say that the transactions have to move in this format only, this is the sequence in which it has to go. The inventory will be received by A, purchase bill will be passed by B. So there will be a time sequence which will happen. So number of people required will be more. The time required to capture the transaction will be more. So this is going to increase the time and cost. The money matter is going to increase because for implementing also I have to spend something. For implementing the audit trail, the security controls which are going to be there, which I am going to talk later, which is going to be shown as a matrix which is there. If I have to implement all that, this is going to consume cost. Today I would have got a pirated software for some money, but now I have to purchase a software. An accounting software I have to purchase. I have to have a genuine license for that. So the cost is going to increase. If my transactions are huge, some software may not help me. So I may have to go for a higher software. Everything has a cost involved. As I said earlier, the business transaction may slow down. Because I may have the check and balances. The guy who is going to give me the goods will not raise the invoice. So there are check and balances which is happening. Like when you go to a bank, you give a check in a particular counter, collect the cash in some other counter. Now that has been removed. Now you go to the cash counter, give it, but still he will not be able to give you the cash immediately because the check and balances is there, but it happens in a system now. Earlier you have to give the check will move to the counter and you will get money. Now it goes the reverse way. You give in the counter, the check is lying with him, but it goes online to the other officer, senior officer, and that officer, only when he accepts or approves, you get the money. So this kind of a time frame issues will come. Requirement may become too rigid. Saying that when I do an audit trail, no other option. No, today I will give you in a manual, tomorrow I will give you a computerized, nothing can go out without a computerized billing. So that may be a rigid scenario, but then it helps. Storage and log navigation issue. Storage issue is bigger issue because this data has to be stored and kept for how many years? 8 years. So long duration storage, and see to it that the data is not damaged. You normally have the habit, you will keep it here and say that it is safe, no, keep it lying. So every now and then you open and see whether it is working or not. It is there or not. So that kind of a scenario is there. So that is another problem. Storage is another issue. And when the audit trail is coming and when the data is going to be in the cloud, we have other issues coming up. Just few random thoughts on audit trail and audit requirements there too. Increase in work for us. It is good in disguise, provided it gets converted into money. And that's where the chart opponent lack marketing ourselves. You have to market saying that this is going to increase the work for the professional, but it is going to save much more for the company. Because when I stop certain things to happen, it will help the assessee more. Any modification, deletion will leave an audit trail. So it's always a problem, there's a scam, or it can be an accountable the way we see it. And then the staff and management will be held responsible for that. So when there is a change which is happening, deletion which is happening, because there are certain accountants habitual. Sir, mark sir. We got a mark stuff, so that kind of a scenario is going to have an issue. So as a professional, how we are going to help the assessee to implement the stoppage of addition, deletion, all that can be seen. And it's an opportunity for that. As far as small companies are concerned, there is no exemption. So when there is no exemption, there is a huge liability. He may say, I am the only person, sir. I am the only person. I do the accounting, I do management, I do everything. Still the audit trail is required. I am a one-man company. I am the only person. I have only one accountant. He takes care of everything. There is no check and balances. Still you have to have the, so then the cost compliances is going to be affordability of software, cost of maintaining books of account and manpower. This is going to increase. Because of this, the audit trail will have an impact. How many of you are having clientele for corporates? And how many of you have already implemented the audit trail? So what is the problem now?
Making the client aware that this is important and the main hurdle is the fees.
No, the problem is the assessor is going to come back and tell you, sir, no, July, sir, you are saying from 1st April you should have done. Had you told me, I would have done it. Had you told me, had you apprised me, I would have done it. So that is the problem. That's the reason why we all woke up late. On 28th of March 2023, everyone thought that this will be extended further. And then came the news saying that it will not be extended. And we were all busy in some other activities or doing some other activities and all that, and the client was not aware of at all. Now we have issue. How we are going to report it for March 24? How we are going to report it? We'll come to that in the end. If they are not adequately prepared, prepare them immediately. And this I have been telling every corporate, saying that you have to do it. You don't have an option. If you don't opt for, I have no option. I have to report. I have no other option. And once I report something negative, then they have to give a clarification in that director's report about that. And this all will be getting highlighted. Today when there's everything soft, everything is soft. So there will be a soft hit coming from the other department saying how many chartered accountants are reporting or not reporting. Very clearly visible now because of the online file. So it is for the corporates to get in touch with the professionals and find out what has to be done. But we are doing the other way around. So all the chambers, wherever you are involved, all the corporates have to be highlighted saying that this is applicable to you. The audit trail has come into force. You have no option but to implement it and see to it that it is implemented correctly and clearly. And we can only just do a coordination work in getting it done. This requirement is not there in any other country. This is the only country, so we are the lead now. Others will follow suit. We are the lead saying audit trail is required. No other country requires it. Though they are talking about in their internal control scenario and all that, audit, SOX audit and all that they are talking about, but there is no requirement as per law. India is the only country where this is required to have an audit trail. So we have to do an audit of the IT environment also, whether they have a software, whether there is a network connectivity, whether they have the IT requirements suffice enough to do all this audit trail and all that. That has to be looked into. So it will consume more time for you to do an audit also, because you have to now understand the IT environment, what is the policy and how they are doing it. All that has to be looked into. So audit cost is going to go up. The chartered accountants should now get updated with the IT knowledge. Whatever software they are using, the knowledge of business is one of the requirements for doing the audit. Knowledge of IT also is required now. The IT environment in which the assessee is doing his business has to be understood and it has to be updated. All related sources you should have with you. Whether it is a SAP scenario, whether it is an Oracle, whether it is a Pinnacle, whichever software they are, we are supposed to equip ourselves into all that and then do the audit. One suggestion, but this also has a cost, where the corporate, which are small corporates, who are not able to implement the audit trail and all that, convert that into LLP so that we are out of it as of now. And what I have been saying and propagating, saying that this will come in the future for all. If that comes, then there is no use in creating it, because conversion will have a taxation issue, income tax. There will be a taxation issue in income tax when you convert a company into an LLP. So these are the few random thoughts which are there. And there will be one more problem which is there. If I am the statutory auditor of a company, and if I am going to say that I will be doing the audit trail vouching, then I have a bigger issue.
Audit trail vouching on
Vouching பண்ணா documentation ஆகும். Documentation பண்ணா vouching பண்ணி ஆகும். Without doing a vouching, you cannot do a documentation. Without doing a documentation, you cannot be saying that audit trail is available. So you will vouch for it, saying that yes, audit trail is in place. So if you do the audit trail, how do you do it? And if you say there is an audit trail, and then you say that yes, audit trail is there, I have seen it, there are some changes also made. That is not been asked in the report, whether there are changes made or not, whether there is an audit trail or not. That's the only question which is there. So if I am going to do the audit trail myself, verification of audit trail, I may land up in bigger trouble, possible. because the true and fair may get affected because of the audit trail which I have seen, and based on that there is an impact on my financials possible. If that is the impact which is there, then I have other issues coming up. Now let's understand the legal compliances. So the background is section 128 of the Companies Act.
So excuse me, sir. So are we saying that somebody else should check this IT system?
You will get the hint as we go forward. You will get the hint as we go forward. But they are going to record it, it's on the recording now. So off the platform I can give you the hint, but on record I will not be able to give you anything. Section 120 of Companies Act requires maintenance and preparation of books of account. So it is talking about preparation and maintenance of books of account. So section 128 is the starting trigger, but it is referring to books of account. So what is books of account? How many of you have read books of account in section 213 of the Companies Act and section 212A of the Income Tax Act? Both are not matching at all. It says books of account means, includes records maintained in respect of, it is an inclusive definition. It's an inclusive definition. Records maintained in respect of all sum of money received and expended by a company and matters in relation to which the receipts and expenditure take place. All sales and purchase of goods and services by the company. So even your sales bill and purchase bill are books of account. The assets and liabilities of the company. So even FA register is also a books of account. And the item of cost as may be prescribed under section 148, that is cost records. All are books of accounts. So all inclusive definition, books of account. And when you talk about 143.3 audit report, there are 9 parameters on which you are talking about books of account. And one of the parameters which there is relating to internal financial control, which has a link to audit trail. So audit trail was already there. Internal financial control they are talking about. So internal financial control, only few companies are out. All others are inside the internal financial control parameters. So that parameter is already covered. So that is also relevant. And then came the notification dated 5th August 2022, Rule 3 of the Accounts Rule 11th August 2022, which said that you should be having the data in, because one of the provisions says you can maintain, Proviso to 143 says you can maintain records in electronic form. So electronic data can be there. So notification dated 5th August 2022 said that the data should be accessible in India. Earlier it was only accessible. So wherever you want you can keep it, it should be accessible. Now they said accessible in India. So it should be accessible in India at any point of time. So if you are going to have soft copy of the data, it should be accessible in India throughout the year and all times for that 8 years. Global scenario we have discussed. Globally, there is no legal requirement to maintain audit trail. In India alone, audit trail has been made mandatory. It was made mandatory earlier, kept in abeyance, and then thereafter, no more extension. And in March 23, the implementation guide to audit trail publication has come, which is a small publication running into 36 pages book. Content is only 30 pages. 30 pages content, including it has all the information relating to how do you draft your disclaimers or qualifications, how do you do it. All that is available in that particular book. It's a very, very relevant book. It is a soft copy also available. Please download it, read it. It is a small book, not like a bank audit book of 800 pages. It's a small book. I am telling you, read that book. Majority of the queries will get solved. So what was the amendment in Rule 3? Rule 3, one of the books, account rules said that books of accounts and other relevant books and papers which are kept in electronic mode shall be remain in accessible in India all times. In India all times, I am saying I am keeping it in the cloud. They are shut down, nothing doing it. Should be accessible throughout and it should be usable. How cleverly they have worded it. Usable. You can't say the data is there. I am not able to download it, so it is not there. It should be usable and it should be usable for subsequent reference as well. So that is what is the requirement of the records. And rule 3.5 says there should be a proper system for storage, retrieval, display or printout of electronic records. So you can't say that no sir, printout la varada. I cannot take printout. They say you have to have it. And if the audit committee requires it, it should be available. Such records should not be disposed of or rendered unusable unless permitted by law. If there is some law which says that, say Information Technology Act says that these records cannot be kept, in that scenario you can say it is not be kept, otherwise it should be always kept. The next one is the most dangerous one. Additionally, the companies are required to maintain backup of the books of account and other relevant books and proper on servers physically located in India or on a daily basis. Earlier it was periodic. Now it should be on a daily basis, you should have it. So backup has to be on a daily basis, even in cases where such are maintained at a place outside India. So think of the practical difficulty in this.
But storage mode, the company does not have any control over the storage.
Which one?
It's corrupt problem.
See, when you deal with third party, you are talking about third party, correct? When you deal with third party, the third party guarantees that the data will be available. When you see the agreement between the parties, say for example, I am on the Google or I am on the Amazon. So then you have to see the agreement, whether that agreement has a process where this will be available, made available is there. They will take the backup, they will do all that thing. What they will do, whether they are there or not. If it is not there, then they are not compliant. So you have to literally read the agreement with the vendor and then you have to see whether the backup has been taken. There are other requirements also. There are some forms to be filed. There are some other requirements also which is going to come. So these amendments are being, earlier it was periodical. So periodical, I would have decided, my policy is taking every 3 months, every 6 months. I am a small company. For a small company taking daily backup, is it possible? See the storage capacity requirement. Now when you take the daily backup, when it has to be taken? So you have to have a policy. When it will be taken? Day end, day start. It can be both ways. Before I start, I will take a backup and then do it. Or I will do it at the end. Possible? So that kind of issues will come. So we have to have a policy in place in line with Rule 5.3, 3.5. Now 3.6 says, this more again, 3.6 says, disclosure by the company to ROC in case service provider has been used. So you have to give the path itself. Used to maintain the books of account in electronic form. So there is a form to be filed wherein you will say who is your service provider, who is maintaining your books of account. And that says name and address of the person in control of the account books and other books and papers in India. Like there are some people who are in charge of maintaining my papers. Like there are writers who is doing for the income tax department. All the documents are stored by someone. So if that is being done, you have to give that information. And where the service provider is located outside India, who is the person in charge in India? If the service provider is outside India, who is the responsible person in India? So you can't just say I will not give any information. You have to say name of the service provider, the internet protocol address of the service provider. So in nothing but the IP address. The IP address you have to give. Location of the service provider wherever applicable. If he is outside India, you have to give the location also where the server is maintained and where the books of account are maintained on a cloud. Up to third level, it was a provider who is staying in some particular country. He is providing from there. I know this address. That is the physical address. Now, when it is in the cloud, it has to be such address as the service provider. So, service provider's address has to be mentioned in the online form which has to be filed. Where the service provider is located outside India, name and address of the person in control of books of account in India. So, there should be a person responsible in India for the person service provider outside India. So you can't say that the service provider is outside India, so I don't have control, you go and catch him. He has to say there is a person in India. If I don't have all these parameters, I should not take service from him. If the other guy says I don't have a representation in India, then I cannot use that particular service provider. Then I have to avoid using that service provider, because all these points, what we are discussing, should be taken care of. Because in the question which is there in the audit report is a simple question. But then there is a violation of rules, you have to get into that also.
The due date for filing this information.
I think it is a 30 days from the date of beginning of the audit. I am not exactly clear on it, but there is a time frame in which you have to file. And today, for not filing the forms, penalties are left, right, center. They are levied 50,000 to 5 lakhs plus contribution for 1 year. These are the basic minimum penalty which is there. That also will come in the screen which is there. Now, in this audit trail, what is the management's responsibility? Proviso to Rule 3.1 says, very funnily it says, provided that for financial year commencing on or after 1st April 2023, every company which uses accounting software for maintaining its books of account shall use only such accounting software which has a record of recording audit trail of each and every transaction, and creating an edit log of any change which are made in the books of account along with the stamping. Saying on which date, who has done it, at what time. All that stamping has to happen, and there is one more catch which is there. Sir, audit trail delete it. Nothing doing. It has to be there. It's not only keeping it, it also has to be maintained throughout the year. This is about management responsibility. When it comes to auditor's responsibility, Rule 11G says whether the company, that is what in the audit report you have to say, whether the company in respect of financial year commencing on or after 1st April 2022 has used such accounting software for maintaining its books of account, has a feature of recording audit trail, that is the edit log facility, and the same has been operated throughout the year for all transactions recorded in the software. The audit trail feature has not been tampered with. See the wording difference.
Why the study for 23? Why is it later?
I'll come to that. As far as auditor's responsibility, this rule 11G was brought in earlier. They forgot to change that. 11G, the date they have forgotten to change. They only gave the extension for management responsibility, and then from 1/4/23 they only changed that date. They changed only in Rule 3.1 and not Rule Proviso. So Rule 11G was not modified. So it continues saying that 1/4/22 audit trail facility and same has to be operated throughout the year for all transactions. Audit trail feature has not been tampered with. There, audit trail cannot be disabled. But here, audit cannot be tampered. That's what you are going to tell in your audit report. Audit trail has been preserved by the company as per the statutory requirement of record retention. So these are two at loggerheads. One says 1423, the other says 1422. So the audit report which are going to be issued for 31/3/23, whether 11G is applicable or not? Yes, it is applicable. So for the company it is not applicable, for the auditor it is applicable. Now how to go about it? Should I now say Rule 11(1)G is applicable, however it has been postponed by notification number so and so and so and so, I have to do it that way, or I can be silent. How we have to proceed? First one, saying 11G, this is one view. The other view is, if it is not applicable, why should I say? If it is not applicable at all, if it is not applicable to the company itself, how it can be made applicable to me? So I will be silent. That's the other way. Majority of listed companies are silent on this. They are not saying anything saying that 11G is applicable and then it has been kept in a way, they are not mentioning it. So you can just go about the same manner saying that we are not going to talk about 11G at all in our audit report as of 1/4, that is 31/3/23. But for 31/3/24, you have to talk about it. So reporting requirement, where it is applicable. So it is getting triggered for all financial year commencing from 1/4/22, but it was kept in abeyance based on the notification or keeping the notification in abeyance till 1/4/23. So from 1/4/23 it is applicable. Audit trail is applicable. Exemption is to only Section 8 companies or manual books. Section 8 companies, manual books, consolidated financial statement. In these three places, you need not talk about this rule 3(1) and 11G. In all other cases, you are supposed to speak about it. Manual books. What do you mean by manual books?
Books are maintained.
Essay writing, knowledge. That physical books are maintained and the data are captured inside that manual. So that is the problem. They are talking about manually. What happens if the data is printed out and given to you? Do you call that manually? Or do you call it as, or is it prohibited? These are the discussions which have to be done at depth. There are companies which outsource it. The outsourcing guy prints everything, binds and gives you. Some gives in spiral binding. Spiral binding books of account. Is spiral binding books of account? So all the audit trail fetch the alien. I don't require much. As an auditor, as a chartered accountant, I am doing an audit. My books are being brought to me. It has been given in soft copy, or it has been given in my hard copy. How do I check the audit trail? Can I go beyond and tell? That's the question. These are big questions in there. What happens? Only time will tell how we have to proceed in this kind of a scenario where the printouts have been given to me, books have been brought in as printouts, as spiral binding or as binded books. But whether spiral binding is books. Is there a definition of books? Normally there is no definition of books in the Companies Act. So if there is not there in the Companies Act, you go to any other act. If there is not there in any other act, you go to general dictionary meaning. So what is books? Very interesting. What is books? Under Income Tax Act, whether books is defined? Whether books is defined in Income Tax Act. 212A, it will come in a future slide, it will come. But at that time, just remind me what is books. It's very, very interesting scenario. How you can argue saying it is not a books. So there is a suggested reporting clause based on the implementation guide. Since the proviso to Rule 3.1 of the company's rule is applicable for company with effect from 1/4/23, therefore reporting is not applicable for financial year ending. This, if you want, you can implement it. You can say that this is not applicable for the current year, hence we are not reporting anything on that. Pause. So reporting other legal and required information, they are saying there should be an assertion by the chartered accountant, the statutory auditor, saying that the audit trail is in place. So you have to say that I have verified of whether the audit feature is configurable. So you have to say it is configurable, not configurable. Whether the audit trail feature was active throughout the year, whether it was switched off, switched on, whether the facility is available, not available. Whether all transactions recorded in the software are covered in the audit trail. So partly I switched off the meter, I did and then switched on. So these are not covered, balance are covered. So that cannot be the scenario. And whether the audit trail has been preserved as per the statutory requirement for record retention. All this is relevant only to books of account, not beyond. Then you have to remember 213, what is books of account, and books of account includes the inclusive definition. So you have to be very careful about saying whether it is covered or not covered in your books of account. So it has to be very clearly recorded somewhere saying that this is what I have construed to the books of account. And this was outside my books of account because of these reasons. Possible. So what could be the approach? What could be the approach for your audit trail verification? It has to be a mixed approach. We have to check the management control which are there, how the management controls the entire scenario, how the audit trail settings have been put in place, who puts it, how it has to be done, and direct checking whether there is a audit trail available or not. Correctly identify the records and transactions that constitute books of account under section 213, most relevant, because unless and until it is books of account, you are not supposed to give a comment. And if you give a comment which is not part of books of account, tomorrow the company can also come against you, saying that you have reported something which is not to be reported, not required by law. Code of ethics, it says something to be reported as per law only should be reported. If it is not required, don't report it. Currently identify the software and controls, the application, the database, the websites which are there, the interfaces, any other IT components used for creation and maintenance of records of books of account. Someone may say it is automated. My software automatically takes backup. So whether that software is developed in that way, where the automation happens, where this backup happens, how it is moved. Ensure such software has an audit trail feature. So we can check the software by the setup information itself. In the setup information, the audit trail is available or not. Who has what control will be known. Like for example, if you are going to do a software, if you are going to have the master password, that means you can change anything, everything. So which is the scenario you have? And whether the changes have been captured in terms of who, when, where, at what time. At what time the changes have happened, what was the changes subsequent, whether first changes has happened, whether it has been captured. If yes, on what date, at what time, stamping has to happen. Someone may ask me a question, whether stamping is required at the time of entering the data? No, not required. The question is, today, can I pass the entry for yesterday? Yes, I can pass the entry. The law doesn't require me to stamp saying that this is passed on this date. However, if the entry is passed today for yesterday and then again I have modified it, then that modification has to be captured and stamped. So I can have backdated, that is my policy. I can say 7 days allowed. In case of banking industry, not even 1 day is allowed. In other cases, some companies they say 1 day is allowed for sales or for purchase 1 day is allowed, so on and so forth. If that is allowed, that's the policy. Then, if the transaction has been captured for the first time, it is allowed. If it is subsequently modified, then the stamping has to be captured. So you can say, no, sir, I have done it overall. When the system was on, when I got into the software, when I got out of the software, that alone I have captured. No, it has to be on the entire database. Or even there can be a direct data change also. Without getting into my software, I can write a package in just getting into the database and changing the database at the back end. Hope I am able to tell you something which is there, it is very technical. I may change something in the database itself without using the software. I may know the language. From that language I may write and finish it off. I can do it outside the software. Possible if some software allow that. If that is there, even that has to be captured. Audit trail has been retained for the period, all the retention records. Ensure completeness and accuracy of the date, time, field change, what are the changes made, what is that is going to impact, all that has to be done, whether it is authorized, not authorized, all has to be captured and kept. Who has done it, at what time, when, everything has to be captured. Luckily they are not asking you which machine, from which machine it was done. No, that is not required. The IP address of the machine is not required, but when it was changed is required. Even tampering the date and time, I have a record. I have an audit trail record where they said that this record was modified on this date at this time and this by this person. I go and modify that. That's what I was talking about earlier, saying log file. There will be a log file created. I will modify that log file itself. I will open the log file, modify it, save it. Possible? If that is possible, even that has to be tracked. If that is tracked, otherwise it is not an audit trail compliant software. So you have to use the services of IT specialists, because the way I have spoken to you, you may not be able to confirm saying that it is there. So you have to remember your wordings according to information explanation to best of my knowledge. That you have to always remember in writing your reports. So one way out is SA 620. There are chartered accountants who are good at information technology. There are chartered accountants who are good at particular softwares. So those people you can rely on to mitigate your risk. Madam, your question has been answered now.
Yeah.
So you are mitigating the risk. There are two ways looking at this. One, I may not be competent enough to carry out the audit of the audit trail. Possible. Number one. Number two, if I do the audit trail myself, I risk more, because the audit trail may land me into certain areas which will go into the true and fair. So everything will get affected. So I have to be very careful.
Sir, when this audit trail to be carried out?
It can be carried out at any point of time. When you are going to sign the report, at that time it should be available, because it is from beginning till the end, not tampered.
Normally after the closure of the...
Yes. When you do the audit, before you come to report preparation, you look at this. It's only after. You can't do it now and say that I have gone there, I have seen and come. After you come back, they may change it. So it has to be seen at the time of preparing your report or finalization of your audit. It is expected that the management ensure that administrative access to the audit trail is restricted to authorized person. This is most relevant, because if everyone is going to have authorization to look into the audit trail, then gone. The management has to come at a clear policy saying that how the audit trail will be implemented and kept. So there is an interplay between section 143.3.1 and rule 6G. 143.3.1 talks about provisions for the internal financial control. They are talking about internal financial control. So we have been already mentioning that there is internal financial control. This internal financial control is bit lesser than audit trail. Audit trail is more larger than. So you read the guidance note of the internal financial control in para 52. It is referring to audit trail, which was not there as per law, but it was talking about audit trail. So audit trail was already there as per the guidance note. Internal financial control, how you check your internal financial control. You cannot check without looking into the audit trail, whether there was a control or not. That has to be looked into. Details guidance available in the implementation guide as well, along with example of scenarios where you are not able to rely on, where you are partly relying on. All kind of scenarios are there in the 36-page book, Implementation Guide to Audit Trail, published in 2023. Soft copy is available. It can be easily downloadable. You can't just say that, oh sir, it's not available. It's not available, I'll write it. That is also not there. And if it is not available, my internal financial control is weak. That also I cannot say. Internal financial control may still be there without the audit trail available. So that we have to see, it can be only a weakness. Now coming to reporting. So if there is something which is not there, you are supposed to report. Now what could be the probable scenarios where reporting may be required? So management may maintain adequate audit trail as required by the account rules. If that is scenario there, then you can say it is maintained. Management may not have identified all record transactions which audit trail should be maintained. So we go at the fag end and tell them that this all should be there. These are part of books of account. They say we never thought this is books of account. So we have not maintained it. So partially not maintained. The accounting software does not have the feature to maintain audit trail, or it was not enabled throughout the audit period. This you will be able to find out based on the software. Based on the software which it generates, you will be able to find out we have not maintained it throughout. So even that has to be reported. So scenario 2 and 3. Scenario 2 and 3 would result in modified adverse report. Scenario 1 is a clean report. Scenario 1 they have maintained it, so clean. Scenario 2 partly maintained or not throughout the year maintained. So this will create an issue for your reporting. Once you have some negative or adverse reporting, even the directors have to give a report on that. So the best way is to, management should create an IT policy for accounting. There should be a separate policy for accounting. Normally they will say we have an IT policy. These are IT policy. That IT policy is not relevant for accounting. I may have a general IT policy saying that I will purchase all my software from this guy, all the hardware by this guy. This guy will maintain that. This is the guy who is going to create my what you call the antivirus. All that they will do. That is a generalized IT security policy. There should be a specific policy for accounting. Accounting specific policy will be based on the matrix done based on the persons available in the company. So that the accounting policy, IT accounting policy has to be separate. Information technology accounting policy has to be separately created. Once you create it, it becomes easier. Today I come, tomorrow you come. Whoever comes, this is the policy. So you have a generalized policy which will help. So we can even help the company in creating this accounting policy. We may not be good at information technology in general policy, but accounting policy we can. We can say that yes, the person who is doing the purchase entry should not make the payment. Check and balance control. This policy we can bring in. We can say that okay, this how many members you have. We have 3 staff. How the 3 staff can be interchanged and the check and balances being brought in. The person who does the payment and receipt for bank will not do BRS policy. This is another policy. So this kind of a policy we can suggest and implement. So this is the reporting which has been picked up from the implementation guide, saying that based on our examination, which included test check, relevant test check, because we are not able to do 100%, it will not be possible. Test check, the company has used an accounting software for maintaining its books of account, which has a feature of recording audit trail or edit log facility, and the same has been operated throughout the year for all relevant transactions recorded in the software. Very clear, in the accounting software, not recorded outside. Outside is not covered, only in the record. Further, during the course audit, we have not come across any instance of it. And if you want, we can additionally also say the audit trail has been preserved for the continuous period. This is one. And one qualification or modification of reporter. There are some areas where it will happen. Books of account not accessible in India. This will be the common issue which will be there. Not accessible throughout the year in India, or not always accessible in India. Possible. Books of account or backup of books of account, but no underlying invoices. All the documents are not captured and kept. So I have accounting in software and bills in physical. Possible. So in that kind of a scenario, your qualification will come. So we have to be very careful about what we are trying to do, what we are trying to understand. We are trying to understand saying that all the documents, even the implementation guide says sales invoice is part of books of account. Purchase invoice is part of books of account. So whether there is audit trail available. So there are partly in software, partly outside software. So you have to be careful in whatever documentation or whatever information you are going to give in the report. Backup maintained physically but not on server. Daily backup is there, but they have an external hard disk. In external hard disk they are doing it, but they are not doing it on the server. There is a difference between a server and a machine.
So, but if all people can do one machine, there won't be any server. So you have to only keep it in the hard disk.
See, there are two ways of looking at it. So we have to understand the difference between a server and a machine. Basic. What is the difference between a server and a machine?
Have take on server, there is no cloud, and you want a server.
No, I am just asking a general question. What is the difference between a server and a machine?
Machine is
Yeah, no, when we go to the client space, you will say this is a server. And how do I understand whether it is a server or a machine? Can someone help me? What is the difference between a server and a machine?
Server, any person can access this. Machine only that particular person only can access the machine. Server, from anywhere, the person, all the person can have access to it.
No.
Server main is data storage. It is only for a specific purpose.
No. It can be for all purposes. No. The difference between a server and a machine is very simple. A server will have an operating system called server operating system. Once I have a server operating system, I can go to a folder and say this folder is accessible by this person or not. Whereas in a machine, I can only do to a drive, C colon, D colon or E colon, whatever drive I say, this drive is shareable, not shareable. That's the only thing I can do. Whereas in a server, I can say this folder is read only. Everyone can only read. This server only write. Someone can only write there. Nothing else he can do. Someone can say read write, and some will say no access to a folder, not to a drive, to a folder. Third, in a server, the server configuration, machine configuration will decide how many people can come at a time. Whereas when you are in a machine network, maximum people who can come at any point of time into this machine is 10. When the 11th person tries, he will say it is not accessible. When someone goes out, he will be able to come in. So that is the difference between a LAN network with a server without a server. Server will decide 25 people, 50, 250, 500. The server will decide how many people can come at any point of time. So all your software capabilities will depend on your machine configuration your network configuration, all that will decide the machine. Because when you talk to some people, no, this software will work in any machine. For example, Tally. You ask them, they'll say, how many users? N number of users. It's like your limited meals. Unlimited meals, limited meals. Unlimited meals, then not. So what is the meaning of unlimited meals?
Quantity is not restricted.
Quantity is restricted, sir, to your capacity, not my capacity. It is the reverse. Capacity, it is restricted, but it is restricted based on your consumption capacity. Same thing is in your server also. The server machine will not decide. The machine will not decide how much. It is on the network capability, the machine capability, the server capability will decide how many people can log in at any point of time.
Sir, the previous slide, sir, not stored on server is adversarial one, sir.
But they are talking about server. They are talking about server. Whether it is adverse or not, you bring to the notice, that's all over. As a chartered accountant, our work is over. We have to only highlight saying that it has been, backup has been taken on external hard disk. Regular backups have been taken.
All the client will be available.
No, this is not happening. So the impact will come only when there is a tampering of data. What they are trying to tell is, catch hold of some person saying that we have looked into it, it is there. If there is something which has been modified later on, it will say that it's modified because this was already there. So he will come to me now. Say, if I am the chartered accountant, they will come to me now, saying that you said, prove that it is there. So I have to have the documentation saying that yes, I have verified it, yes, this is available. This was available and I did the audit. And that's how I given the report. If that is not available with me, then I am also in suit. Disciplinary action will be taken against me also.
So, this is applicable for foreign branches also.
All companies in India. And for all branches, we'll come to that definition. Very funny definition. It's 143.1. For all branches also, it should be in the registered office.
So, for us to check the audit trail of the software that is listed on the audit.
So that's how SA 620. SA 620. SA 620 will help you because there are two things to be looked at it. One, if it is in a foreign land, the audit will be done by foreign auditors. It will be under that law, not in the Indian law. So that is out. Okay. It is a branch audited there. It's outside the purview. Okay. But it says you have to be, if you read this section, it says any branch outside India also everything should be in the head office. Registered office. So you have the backup here. When you consolidate, you rely on someone's auditor's report, correct?
But they don't have a ability to come to the market.
If you want to be on a safer side, you can write that. Because the entire data which you are going to merge and add here is audited by someone else. So you are relying on that audit report. So that person is responsible for that particular data. You are only responsible to see whether the data is available here or not. And if you want to talk about the audit trail on that data also, then you have to have a SA 620.
Sir, if later install the report.
Kandipa. Kandipa. You may word it in such a way that it was implemented only from such and such date, from that date to this date, it was not available. And the management in their report, director's report, they will say that this was not implemented because of the other compliance related issues. They have to just give why they have not done it for 4 months or 3 months, as the case may be. So return the representation. This will not help you fully, but then still you can use it. Acknowledgement, management responsibility for establishing and maintaining adequate control. So the control is with the management. for identifying, maintaining, controlling, monitoring our audit trails. It is their responsibility. So you have to take it from there in writing that the management representation, this should be included. The management has evaluation of all that has been done. Adequacy and effectiveness of the company's procedure for compliance is done. All this can be only a safeguard to you, but this cannot be relied fully. You have to do a testing yourself. Adequacy and effectiveness of procedures in relation to audit trails should also be kept in mind. The management has disclosed everything, that also has to be included. So these are the paras which are to be included in your management representation letter, which hitherto we are taking. We have to include this also. And also describing instances of identification of fraud while reviewing and testing the samples. If they have done some sample testings, if there are some frauds which have been identified, even that has to be shared by them. So they have to say that there is no fraud which has happened throughout that particular period. SA 230, audit documentation. A sufficient and appropriate record of the basis for coming to a conclusion that audit trail is in place, everything is in place. You have to have a documentation. A documentation of the audit trail in place has to be there. What all the tests you have done, when it was done, how it was done, everything has to be documented and kept. Evidence that the audit was planned and performed in accordance with the implementation guide and standard of auditing issued by SIAI. So that's the implementation guide for the audit trail. Whether that has been considered in doing the entire audit trail, whether the documents have been kept, which is the software, how it was done, everything has to be considered and noted down, and documentation has to be maintained and produced as and when required. You can't again say that it was kept in some file, someone deleted it. No, you have to have it as and when called for. So you have to comply with the requirement of SA 230 audit documentation in relation to audit trail, along with the other things which you are doing. The rules are silent about certain things. The rule doesn't specifically the fields or data which is considered to be part of the audit trail. For example, change of address, change of GSTN number, party name error rectification, all that, whether it has to be captured or not is not known, but it is advisable to capture that also and keep it. It is easy said and done, because when I capture, literally there is a replica of the data created. If I have one voucher and if I have changed some parameters in that voucher, then a replica is created for that. Again I change something, again a replica is created. Again I change something, again replica is created. So multiple replica is created, data size increases. Once the data size increases, all kind of issues will come. So we have to be careful about the data changes which is captured, and if it is captured, we have to look into it. And if it is not captured, that also we have to look into it. See, this area is relevant. Why this was not captured? Say for example, narration change. Some may say that narration change is nothing, no impact on a financial statement. But there is a data change. So it has to be captured. Accounting software is not defined at all. What is accounting software? Is not defined in the entire act. So you have to go only by the normal definition. Anything which captures the financial transaction is an accounting software. Anything which is related to financial transaction is also accounting software. Now there can be something which is having financial transaction, but it is not affecting the accounts. Take for example quotes, quotations. You get quotations from multiple people. These are having financial information, but it is not impacting your financial transaction. So it may not be part of your accounting software. Whether audit trail for all associated software has to be considered. So we have to first define what is books of account. Once you come to conclusion like these are part of books of account, then all our audit trail is required. Like fixed asset register. Because the word used is all assets and liabilities. When I say all assets and liabilities, what they mean? Whether FA is considered or not considered as books of account. If I take a stand saying FA is not part of a books of account, it's only a compliance register, then it's outside the audit trail. If it is part of it, then it is part of the audit trail. HR related document, your purchase department document, sales department documents, all, whether it is part of or not, you have to document it saying it is not part or it's part. First you have to document it. Account rules requires backup maintenance on daily basis. Does it mean that audit trail backup also has to be maintained on daily basis?
If you have the software, audit trail, our changes in the trail. Only when change in the will happen. There is no change what.
See what happens is if I take a backup today, the audit trail backup will be up today. Now then if you are going to have multiple backups, whether I have to compare the audit trail of every backup. See, accounting data comparison, I understand. But audit trail, because when once I open the data today and again do a change, there's an audit trail available. So backup of audit trail according to me is not required. It should be in place at any point of time when I am going to see at the year end whether it was there throughout the year. So when it is there throughout the year, whether I taken the backup or not doesn't matter. Accounting software backup also doesn't matter if they have the replica. But I don't know, they want the backup to be done on a daily basis. There's a lacuna there. Daily backup and then also have the audit trail. If the audit trail is available, there's need of a backup. So they are envisaging some softwares which are having that issue. Take for example what Sir was saying. We don't have for the last 40 days or 120 days. Till August we don't have. If we don't have till August, whether you have done a daily backup. If there is a daily backup available, now I can map it and see. I can map between the two data and then see. That could be the reason. Otherwise, I don't see a reason why I should take the backup of audit trail. If that is the scenario, if I have to take even for the backup, everyday backup, and I was just telling you saying how the replica happens, how the data backup happens. The replica of the data is going to happen. So data is going to become huge. So if I am going to take daily backup, the data is really very huge. So I have to spend a lot of money on server itself. So IT space will be required more. The accounts rule mandate that the company should use accounting software which has an inbuilt. In case it is not able to procure such or has procured midway, will it be construed as non-compliance? So if it is going to be non-compliance, there is a penal clause. There is a penal clause of 50,000 to 5 lakhs and imprisonment of 1 year on all directors and the company as well. So that whether it will be penalized, that's a question. I may report it, they may also say it. They may also say, but there is nothing called reasonable cost under the Companies Act. ROC may say, I will levy because the provision says you have not complied with, so I will levy. So there is an interplay between the security and the controls, audit trail and edit log. There is an interplay between all the three. Without security, audit trail cannot come. Without audit trail, edit log cannot come. So they are all interlinked. So if you have to have that interplay and you have to capture that interplay, then there should be a security control, IT policy. IT policy, two type of IT policies have to be there. One IT policy for in general for all the softwares and one for the accounting software per se. And then you have to have password policy You have general IT policy, then you have general security policy. General security policy is another policy which will have on the security aspect. And then you have the password policy. Security policy is how I am going to have the security, what kind of securities I will have. That is the security policy. And the password policy is how the width of the policy will be there, the password will be there, alphanumerical special characters, how it has to be changed within so many period, whether compulsorily changed, not changed, whether it to be notified or not notified. Like you get in a bank, when you enter into a bank's transaction, bank password will say your password is going to expire in next 7 days, 6 days, and then they say change password. Then they will say no, repeat password will not be allowed. 3 password, 2 password, all that is password policy. Then you have the user role policy or user role matrix. Who will do what he can do, what he cannot do. Take for example, I may have a policy saying that the salesman will not be able to see my profit and loss account. The person who is doing the sales activity will not be able to see my profit and loss account balance sheet. He cannot see. That is one of the matrix which we talk about. I may say sales manager may modify the voucher. Sales person will not modify the voucher. He cannot modify, he cannot take a reprint of the voucher also. Possible. I can give a step-by-step methodology saying what he can do, what he cannot do. That is what is user role matrix. It's a very, very complex scenario. If someone is interested, I can show you the matrix itself, how it will work. It's a huge matrix which have to be created. Then you have something called users and passwords. So how many users will be there? What will be the user name? Like some companies, they always give the code number, employee code number as the user. Password is based on the password policy. Then the user can have its own password. Once I will create, like in a banking, you log in for the first time, change password. Something comes in your post, you look at it, then you change password, and thereafter the password policy decides when you have to change, how you have to change the password, and what should be the length and width of the password. So that users and passwords you will decide based on saying I will go by employee code or I will go by salesman 1, 2, 3, 4 as the case may be. Or I may even say that I will put the name and give the passwords. Audit features, whether the software has an audit features, if yes, who can use the audit features? Who can use the audit features? How it can be used? What are the features which are available? What is the purpose of those features and how the reports are to be generated? Normally these audit features are kept silent. They are not opened up. Whenever I want to generate, at that time I will open up, generate and close it again. This is about the audit features, like who has passed how many vouchers, who has created the ledgers, who modified these ledgers. All that is audit features. Audit features inbuilt in the software. Audit trail feature is different, audit edit log is different, audit feature is different. And all this is relating to accounting procedures or accounting software. Only in accounting software we implement all this and see. Now when you implement the security and do the interplay between the security and the audit trail and the edit log, you look into the risk management. You look at the risk management saying, first I will identify the risk. What is the risk which is there? When I create a user ID, what is the risk which I take? If I am going to allow a trial balance to be printed by someone, then he will share my trial balance with anyone. Possible? So I will stop him from seeing my trial balance. I may allow him to see trial balance, but I will not allow him to print the trial balance. Possible. Only preview. You cannot print. So I have to literally do a testing how the implementation is happening. So what is the other way of sending a trial balance if I am not able to print it? Mail it, export it into any other format. So all that I can stop it if I am able to do it in the risk assessment, and if I am able to stop all that, then I am successful. The only option which will be available with him was screenshot. Even a screenshot I can circulate by removing the screenshot screen from the keyboard. I may not allow certain keys to be working in a particular fashion, possible. So the only option left is photo. So then, for that what should I do? Prohibit mobiles itself. Possible. Possible. So that is how I identify my risk and then assess my risk. What happens if this happens? It goes beyond my. So I identify the risk, saying that yes, this person may share my trial balance with someone. So I assess what happens if the trial balance goes to someone. Nothing more dangerous, leave it. If it is dangerous, then I bring in alternate measure and control. So I bring the controls there in, and from the controls I do review control. What is the review control? I every now and then try to find out whether this can be done. It has been overwritten by parameters by some mistake, and review and see whether the trial balance is being able to share. So I myself will call him and say, hey, print the trial balance and send me. If he is able to bring it, then that means my controls is not in place. I'll again go and identify the risk. So this is what is the risk assessment. So coming to the edit log, implementation and complexities which are available. What if I don't migrate? That's a big question. What if I don't migrate into the new scenario? There's a big risk of the ROC coming up and pulling you up saying that you have not done it, and if as a chartered accountant you are not reporting it, you will also be pulled up. What is the role of the auditors in the edit log? What is your role? To verify whether it is in place throughout the year, whether it has been captured and kept as per the rule, whether it has been done. If it is not done, the report. If it is partly done, the report. Be double sure. If you are going to give a clean report, document it very cleanly, saying that it is there in place. If not, you have to word your report accordingly. Document right from what is part of books of account and whether the audit trail was in place, if in place, from which date, and the document saying that you have seen that it was available on that. Can I take the data and keep it with me? Do that. Can we keep the data with us? Say for example, data is in Tally. Can I keep the data with me? Saying I have given the audit report, so can I keep the data with me? No. I am not the proprietary of the data. I can pull out information from the data, but I cannot keep the entire data. So I can take the sales register and keep it, I can take the purchase register and keep it, I can do based on that sampling, all that I can do. But keeping the entire data is not correct. So I can't say that I have the entire data, so I have the document. No. Because when someone you are going to produce it, you are going to generate it on that date. The date on which you are going to be asked for. So generate it well when you are doing the audit. Before closing the audit, generate all the reports, all the screenshots which you want, and keep it to yourself. And if you are not able to do it, then accordingly word your reports. So evaluate, suggest, and report. So you have to evaluate your entire audit trail which is there, and then look into it, suggest if there is some changes which are required to be done for future, and report accordingly. What is covered in edit log? Again, you have to see what is books of account, and each change in books of account has to be captured and kept. Any change whether it is in GST number, whether it is in address, whether it is group change from Sunday creditors to Sunday debtors, whatever changes which has been done, all the changes have to be captured and kept. So is there a disable feature? If there is a disable feature, yes, that itself is wrong. If there is a disable feature for edit log, saying that I can shut down the edit log for a certain period, then that itself is a negative. So that cannot be relied and then it has to be reported. Who is responsible for edit log? Management. What if there are multiple businesses? One business edit log, another business no edit log. Like what he was talking about the foreign branches. He was talking about foreign branches. He was talking about some foreign branches. We'll look into that also as we come to the definition, which I have a printout. I could not include it in the. So what happens if there are multiple branches? One branch has the edit log, the other doesn't have it.
It's not there. It's not there.
It's not there in partly. So we have to accordingly word in our report. So just I am getting into the section 128, sub clause 1. Every company shall prepare and keep at it registered office books of account and other relevant books and papers and financial statement for every year, which give a true and fair view of the state of the company, including that of its branch office or offices, if any, and explain the transaction affected both at head office and branches. It is talking about branches also. And then it goes on to say, provide that all other and shall be kept on accrual basis and according to double entry system. Provided that all or any of the books of account aforesaid or other relevant papers may be kept at such other place in India as the board of directors may decide, and where such a decision is taken, the company shall within 7 days thereof file with the registrar a notice in writing given the full address of that other place. So when you are going to keep it on the server outside India, 7 days. Within 7 days you have to keep it. When they are talking about every year, according to me, every 7th April they have to file one more form saying that this year also I am going to keep it. So it's talking about every year. So it is allowing me to keep and have the data in electronic mode. That also is there only in the proviso. Provided further that the company may keep such account, books of account, or other relevant papers in electronic mode in such a manner as may be prescribed. So they can maintain in electronic mode. If you read section 212A of the Income Tax Act, that reads as books or books of account includes ledger, day books, cash books, account books and other books, whether kept in the written form or in electronic form or in digital form, or as printouts of the data stored in electronic form or in such digital form, or in a floppy disk, tape or any other form of electromagnetic data storage device. So there, printout is considered to be books of account. Whereas under Companies Act, printout is not considered to be books of account. Is it so? It's only saying it can be also maintained electronic. So books of account can be maintained by printout also. But then according to me, the audit trail will not apply if it is a printed books of account. This is my personal view. Printed books of account,
Is it manual books or?
that is only for exemption of audit trail.
That's
So
what.
audit trail itself cannot be implemented. It's more like your rule 11G cannot be implemented when rule 3.1 gives an exemption. Very similar to impossibility of performance. That could be the scenario. So it takes me to the question, what is books? Books of account starts with the word books. So what is books? Whether spiral binding is books.
Yeah. It is restricted to the books.
He says it's yes. Any other view?
Something that is hardbound.
Something which is hardbound. So contrary to what is the basis on which you are coming to hardbound is only books of account?
Because in olden days when you write physical books, it's the hardbound books which you write.
So there are some case laws in income tax. Under income tax law, there are case laws which are there. One is from the Gujarat High Court, the other is from Kerala High Court, where they had gone into the definition of books. Books is not defined under the income tax act at all. Books is referred to in 43.3. For plant and machinery, they have referred to books for the depreciation purposes, only referred to as books. So there is no definition of books. Whenever there is no definition of books in the said act, then you go to the other acts. There is no other act also. So then you go to dictionary meaning. The dictionary meaning of book is very, very funny. The dictionary meaning of book is paper of even size, having content, stitched on one side, hardbound on the top and bottom. Now tell me spiral binding. Stitched on one side, hard on the top and bottom. Now tell me whether the spiral binding is books of account.
It doesn't fit.
It is not books of account. So you have to become very careful when you are going to write something and you are going to come to some conclusions. When you are saying it is part of books of accounts or not, in that scenario it is going to create a huge issue. Huge issue. So we have to say why you are not saying it's a books of account and why you are considering this as books of account. You may have to do a noting and keep it in your minutes, saying why you are considering this as note of books of account and then done it. And how you are going to document it. Off the record we can speak on that. And it says 8 years along with all vouchers. Maintain it for 8 years along with all vouchers, and if you don't do all this, subclause 6 says, if the managing director, whole-time director in charge of finance, chief financial officer, or any other person of a company charged by the board with the duty of complying with the provision of this section, contravenes such provisions, such managing director so and so and so, shall be punishable with imprisonment for a term which may extend to 1 year, or with fine which shall not be less than 50,000, but may not extend 5 lakhs, or with both. So it is for, if you are going to authorize more than one officer, multiple. So that is the issue with the books of account to be kept by the company itself. So when many of the places it are kept at the respective branches, like what he said, this foreign branch is lying with that. No one read this. If I am going to say it is lying with the branch only, not with the head office, I should have informed. I should have filed it, saying for this branch it is lying there. It has to be done within 7 days. So again, contravention. Anyone who is going to have in the cloud contravention already, how many of us has filed it? So that's the reason why I said audit trail is very, 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 very serious. It's going to have a lot of repercussions in the what we call the enlightenment to the entire industry is not there. How many of them are filing, not filing, nothing is known. One fine morning you will get a notice saying that 50,000 penalty, leave it. You litigate. With this, I come to conclusion of the theory part. If you want, I can get into Tally and show you how it works in Tally. How the edit log works in Tally. If you are interested, we can go to that and see.
Or actually discussion.
there's something called edit log. In Tally, there's something called edit log version. There's a separate version. There's a separate version. Now there are 3 versions which are there in the market as far as Tally itself is concerned. There's a Tally Prime 3.0, there's a Tally Prime 2.1, and there's a Tally Prime 3.0 edit log. 3 are there. This edit log fulfills all the information which are there, which are required as per the law. It has all that features which are required as per law, as tested, as on date by me. But we don't know what can happen behind. I can do something which, by, say for example, this is a printout which has come. Based on the font, based on this presentation, you will be able to know that this has come from this particular place. Like some officers have the policy of saying that if it is a Word file, this is the font, this is the size. If it is Excel printout, this is the font, this is the size. And based on the presentation, you will be able to tell that this is from my office. This letter is from my office. You are able to tell, correct? So if I want to do something else, what I do is, when the printout goes from the invoice, for example, Tally invoice. Tally invoice has a particular format, correct? So I can change that format by saying that take the invoice number to the bottom, take the date to the bottom, take the party name to the middle, so on and so forth. I can do some changes. I can even go and say change the font also. So I write something which will interfere when the data moves from Tally to the printer. From Tally to the printer, when the data is moving, I'll interfere and change it. Possible. I'll write a small software, that's all, nothing else. I can do it. So this is what is called API, interface which are there, which interferes into the transaction which is going to happen. So I can do that also. We have not tried out here. In audit edit log also, whether I will be able to do that. That is not known. So when you see the edit log on the top corner, so when you see the edit log, even at the bottom when I have pinned it, I have pinned the software at the panel, it says EL, and at this it says edit log gold. If it is silver, it will say edit log silver. If you have the same license can be used across 3, 2.1 as well as edit log. So this, what is edit log company? Once I open the data, once I open this data, it says it requires a migration because I am getting into edit log. All along it was without edit log. Now I am moving to edit log. So it is asking me to give the password and it says it will migrate now. It will migrate to edit log and it gives you all the parameters will be migrated, making the data compatible with this release, will be retained and it will be renamed as a folder, and then it will say that will always be keep a log of all activities such as creation of masters and everything. It will create and keep the log. So if you are going to say that switch off, not possible. Switching off the edit log is not possible. So it is always also finding if there is any difference. So I will say migrate. So immediately they are migrated. Once it gets migrated, the tally folder number will change to 6 digit. Where it is trying to seal all the vouchers now. When I am doing this, all the voucher numbers, everything is now freezed. Once I am into edit log, everything is freezed. If I am going to pass some entry backdated, my invoice numbers will not change. My invoice number which have been already given to someone will continue to be the same. It will not allow me to change the invoice number. Number one. Number two, the edit log will now have a feature saying when the edit log was done, when it was not done. So what I will try to do is, once I get into the edit log, I have the edit log data. I will go out and then try to open it in the normal data. Once I open into the normal data, and again I come back and open into the edit log data, it will show you saying that for this particular 1 minute or 30 seconds, this was outside the edit log. It will show you the screen. That's how it captures the entire thing. So unless until you have good storage area, this will store up. Because it is going to create a replica of the vouchers. The size of the data will increase. You can just see going twice, just getting in, getting out, and see the data size, the data size will increase. And if you are going to do for more and more vouchers, it will increase further.
Once you use the edit log, look at normal, use of operation.
It will tell you. It will tell you that it was outside for this period and it's all. So then it fails, that's all. The audit trail fails, straight away negative report.
Audit trail fails. How does the data, will be revised data?
It will be revised data. It will be revised data because you went out, did something and again come back. Now that will be freezed. Verifying between these two data is only opening these two data and seeing together. Parallel to each other. So once the backup happens, you are able to see that? It's a 6-digit number. The 6-digit number also happens in Tally 3. Tally 3.0, all the data is 6-digit. 4-digit, 5-digit, 6-digit. That's how it goes. Earlier it was used to be 3-digit, then 4, then 5, now 6. Till it opens, you have any other question or anything to discuss in the audit trail?
You said you can backdate the entry.
I never said backdate the entries. I said if I have a policy of allowing a voucher entry to be passed 3 days back, sitting today, any voucher which is 3 days piled up, I can pass the entry for the first time. If I am allowing it in my system, then it will get captured and it will not say it is an audit trail issue. Audit trail is only subsequent to first time capture. So first time capture is my policy. I may have 3 days, 7 days backdated entries. For example, for year end, March 31/3/2023, I may pass so many audit entries, journal entries now. All that will be allowed, that will not be considered to be an edited entries. Once I have passed and thereafter I do some changes in that, then it will be a edit entries and that will come into the edit log. Passing for the first time will not come under. Suppose I am transferring it to edit log and thereafter I do an entry in the 3 days back, 4 days back, voucher numbers will not change.
What will happen if the company starts writing the books only from now on?
Nothing will happen. They are safe.
First 3-4 months,
They are safe.
you want to qualify.
Sir, I have to see when I am doing the audit. If they say that edit log is there right from beginning to the end, I have no issue. If the edit log says that no, the edit log has started only now, on this date, I have issue. That's how it goes. So it gives a report saying that these are the vouchers which are there. So this company has got opened. What I will do is, I will close this company and now try to open the same company in 3.0, older version. We'll just give a minute gap so that it will be clearly capturing saying when it was opened and when it was again reopened here. So what will happen is, I will just give that same path. I will not be able to open in 2.1. Reverse working will not happen. Once I am in 3.0, it cannot go back to 2.1. So I had opened 2.1. With the 3 edition, we are right now doing it only for the first time. Earlier we used to do it for 2.1. The same thing which it did for the earlier version. Now again it is saying that it is taking a backup. So once it takes a backup, it will open. Now if I say so it gives me a message saying that this company was migrated on 19/7/2023 at 7/6 and then thereafter it was moved out at 7/9 and then again re-brought in at 7/10. Now you may say that this also I can tamper. I can only do photoshopping, nothing else, because I cannot be able to export. I cannot be able to export. No export, nothing. So I have to have only screenshots. I'll create screenshots and keep it as my records. So if I don't see anything here, that means audit trail was there throughout, edit log was there throughout the year or data for which it is there. Throughout it is there. So this is about edit log in general. Edit log in general, how it is working. Now let us try to alter something and see. Say for example, I just change this to something, I change it. I say trade payables. I just say expense. And then I also change it saying that something like this. I have done 2 changes in my ledger. show you in two tables what are the changes which you have done. These are the altered ledgers. This is the ledger which was altered. Just showing two columns how the alteration has happened. They made some changes in the edit log 3, but it will show you very clearly what was the changes done. It will show you in red in color, saying these are the changes which have been made. Serial 1, serial 2, like what it was showing here, like what it is showing here one by one, it will be also showing there one by one, saying this was the first change, this was the second change, this was the third change. As you enter and see, here it will not allow you, there it will allow you to enter, and it will give you in two columns what are the changes which have been there. If the changes are there, it will be red in color. So it will be red in color, it will show these are the changes which have been made. Even in case of voucher, it will say what are the vouchers which have been modified and what is the color changes which have happened. It will show you in ledger, it will show you in vouchers, it will show you in day book, it will show you in balance sheet also. It will show you all the changes which have been made across, and if they are moved out, how they are moved out and what they have done. All that will be shown. This is what is there in the audit trail, but for that you have to have the security in place. This security has to be in place. Unless until the security is there, and we are talking about some features, audit features. We were talking about in general audit features will be there in the software. How to verify that? This is the place. Enable tally audit features. If you say yes, then the audit features will get activated and you will be able to see the audit features here. Tally audit. So how many users are there? How many masters are there? And how many type of vouchers are there? All that you can go and get into it and find out how many things are being done. Possible. So if you are able to implement wherever you have tally, you have to ask them to implement the policy also. The policy is also here. The policy is here. Password policy. What is the password policy? How we are going to keep it? All that you can decide. And also you can say controls, user roles. What all they can do, what all they cannot do. All that controls are mapped here. So once I map it, it is based on bundle of usages and then I map the employees to that. So I can create, I can say that this person cannot have access to printing also. I can say that he cannot print. None of the vouchers he can print. So he will not be able to print any of the vouchers. So I can bring in all the security levels. Without security levels in place, you will not be able to do the audit trail features. It's not possible. Security feature has to be there. At least one security should be there. That is the admin security. At least one security is there, then the audit trail and audit log all can happen. Otherwise, it cannot happen. Any query? Anything to supplement, add?
Firms which do not have in-house IT experts, how they can overcome this audit trail reporting.
They can outsource it.
But outsource still it will be responsibility of the statutory auditor.
Correct. You just outsource it. The outsourced person, you document saying what you want, and accordingly that they will deliver. For example, SIRC asked me to deliver today's lecture. So that is a contract. I have delivered. So that's how it happens. If the delivery is not good, you have to take action accordingly.
The client will allow that this kind of outsourced person to access that system.
He has no other option. Otherwise 50,000 to 5 lakhs is good figure. So 50,000 for the company, 50,000 for the directors. If you say none of the directors are in charge of finance, then all the directors. If you say director A is in charge of finance, then that director will. So if that is the scenario, you have to look at the pros and cons. Somehow it has to be implemented. Someone has to implement someday or the other. So it is better now. If they don't have in-house, then outsource it. If I am not able to do it, I will find someone who is good at, say for example, SAP implementation, I may not be good at. I will go to someone who is good at SAP implementation. I will put in and I will tell him that you tell me that it is there. You every year verify and tell me, give me certificate. Every year he has to do that. So when I implement, say for example, if I am not there in-house, I will put a contract which is called an annual contract, saying that so many times I will do it at this cost. Additional time, if there are employee changes, I have to change something for you. The security controls and everything, I have to change it. Then you have to give me accordingly. The majority of the time what happens is it happens through online. The rainy desk, but that is dangerous. The only thing which I have to do is you log in here, you give the master password, you come inside, I disconnect. So I can control now. I can take over. So that's the reason why going through that AnyDesk or TeamViewer is not advised. It is better to go there, understand, implement, test and come out. And it's not that simple. It's not that simple that I will put something and everything will be in place. No. I have to test it. I have to test it in a negative way. For example, if I want you to come here from this route, then I will not test whether you can come this route. I will only test whether you cannot come from this side. I will do from all the testing other than what you can do. So it is a reverse testing, so it is a cumbersome process. It's a cumbersome process to look at it and see to it that you do not deviate from what you are supposed to do. Hope I am clear. And the companies always are reluctant because they will say, no, not required, everything is going on smoothly, but you have to tell them that section is like that. Section 143 is very, very dangerously worded. And now the way they are doing it, the way the notices are coming and the penalties are being levied, now it is becoming more and more difficult. It's always advisable to fall in line, comply. That will be less costlier and it will be saving him in some other way. Like he'll be able to find something which is he was never able to find it. It was happening under his nose. He will never be able to do it. That will happen. I did not prepare fully on Tally because Tally was not the subject. It was only audit trail. Because you wanted to see it, so I just showed you. It is there for voucher also. I just forgot the key where it has to be seen.
So most of the companies are using anyway ERP, so it should not be a problem. They cannot delete vouchers, they don't have even in the normal scenario, even before the audit trail was introduced, we're talking about software like SAP, Oracle. They don't have a.
Do you think that it cannot be done? Do you really think that it cannot be done? It can be done. It is not that it cannot be done. It can be done. Like for example, your bank audits, they say all are system driven, NPA. Then how do they do it at the back end? They do it.
It's probably Excel and then
They audit. So then again repost it and then send it to you as a text file. So what you get is a altered file. So it is, you can't be damn sure that just because it is a SAP or Oracle or it is a Pinnacle, audit trail is there. Audit trail you have to literally see what I have seen now. It was there throughout the year. It has to show me a log like this. So the log file has to be seen. So I may not be competent enough to do that itself. I may not be competent. They may say I have a policy. All the transactions are captured, no one can change it. All that are on paper plate. How do you test it?
In the ERP system, there are customized reports, not the reports which is coming in the base software. Reports which are generated from the IT internal system. So with this edit log also we configure to track that, because those customized reports they can change. They can export it to Excel and then they can send it across to
Okay.
So those
Correct.
kind of things how it's
See, they are talking only about account books, books of account. So whether that report is part of your books of account, if you consider that is part of books of account, then required. Edit log is required. If these reports are not part of it, for example, sales register. Sales register is outside, somewhere it is generated from outside the package and given to you, then edit log is required for that also. Because when I have done the bank audit for this year, we came across a scenario where the loan balance file did not have the date correctly mapping for the date of sanction. It was special characters. So how do I rely on that? It's not impacting me anywhere, but it is giving me a wrong report. Loan balance file, the date of sanction doesn't impact me anywhere, unless until it's an NP and all that, it doesn't impact me. But then the report is wrong. So I don't know whether the report has got tampered in between. How do I rely on that report? That's the issue. So I have to find out from a software engineer saying that this is done without someone interfering into it. Like what I gave an example, between the software and the print, I can interfere and change it. I will just attach that software to the original software, that's it. And that's the reason why normally when I talk on bank audit, I say this, all these ERPs are a bundle of laddu, bundi laddu. One bundi falls off somewhere, still it's a laddu. There is a small hole in between, still it's a laddu. So that's the issue. So that you have to go to, it is better that you get a expert opinion saying the audit log is there is no changes available, all the changes if done is available there. So literally we have to test it. So I have to do some changes and see whether the changes has been captured and kept. That changes may not be material or it may not be on the financial data, it can be on other data. But it should be done and tested. And that's the reason why it should be done by an expert and done it to them. So even in case of a software which is SAP related, then you have to find someone who is good at SAP and then try to test it. If there is someone in Tally, test it with someone who is having a good knowledge in Tally. They will test and give you correct. And as I said earlier, if you test it yourself, then you have to look at whether true and fair is getting effective. In the sample size, if you take 10 as a sample and you test 10 vouchers and see whether that capturing is there and that contains some changes, then you have to increase your sample. Your work is going to increase. Any other question?
Sir, sir, was it about sales register being part of? So for some retail units, like customers, they use a separate software for the billing and this thing. How do we do the audit trail?
So the question is, I have a separate software for sales. Now from sales, does the data get into your accounting software?
Doesn't go directly.
It goes directly, it doesn't go directly, it goes directly. Either it goes directly or you push it.
Yes.
You manually pull and push it. So when you manually pull and push it, what is there in the books of account is final. That you test it with your outside whether the pull and push has happened correctly or not. Whether through a test check or something. But final is what? the books of account. So that is the final. So that is the final, and that is what we are going to rely on. Because when you are going to do an audit, you are not going to do an audit with the third party software or third outside software. You are going to do with the books of account. In the books of account, whatever is the sales figure, that figure only you are going to check it and vouch it. Your GST return, everything will be through that only. So if there is something which is there in between the standalone software and the accounting software, then it has to be looked into a separate plan. For audit trail, it is not. That is a forensic audit. That's a forensic audit, whether the data have been moved incorrectly or not. The starting point of forensic audit.
So that will not be considered as an associate.
Billing software is not an associate software.
But it says all purchase record systems will be covered, right?
Correct. All are
So
covered.
my tally is only recording one entry which is sale for the day, but the entire detail customer wise is maintained in the software for which I need to verify. Then that log has to be given for
You are trying to tell me that it is going as a single entry. If it is going as a single entry, it is a backup which is there, then it is part of it.
Normally, if you see companies, the front end accounting software will be interlinked when they have multiple databases.
See, that is a way of looking at things. I, as a person, will say that I have to have one data. I don't want to have multiple data. If I have multiple data and multiple backup, all issues will come. If it is going to be pulled in as every single voucher, like for example, the GST law, they are allowing you bundling of vouchers for a particular day, and you would have taken the printout of the bills also. So the bills copies, hard copies are available. I pass a single entry possible. Not an issue. I need not have that other software possible.
Excel will be also considered as accounting software,
Excel can be an accounting software.
but it doesn't record. It is manually recorded. It's just an electronic way of storing the
It is a storage.
yeah.
It's a storage and calculator, both together. Splits the software. It's an accounting software. You can do accounting through that. Sorry, through Excel. Possible. You can write it. If you are going to maintain that as an yes, then audit trail is required.
The law requires you to maintain electronically. Earlier, fixed asset registers were maintained manually. Now, because electronic requirement, many companies are maintaining in Excel form.
No. See, what they are trying to tell you is can also be maintained electronically. They never said everything is still electronic. They said it can be maintained electronic. Now it is easier to maintain electronic, so people have gone into Excel and all that. If that is the scenario, it has to be protected.
But how will you make the fixes? Now, if a company is using a tally, you will only have purchase of fixed asset as one single entry. The item-wise fixed asset register will be in the tally.
It can be brought in. It can be brought in, and the register can be generated using the tally itself. It all depends on the number of assets which you have. We do it inside tally itself. We do the entire FA register details in tally. And if you want, we can write a TDL and generate a report in the format which you want. Right from beginning, all the informations are captured and kept in there. Possible. But if you are going to maintain it outside, then you have to have the audit trail. If there is no audit trail available, there is a solution for that, but on record I will not do it. Particularly for the current year where you have the issue, because already the 4 months have gone.
Yes.
July itself is gone now. So what all you are going to implement, understand, and then try to implement it, even August will go off. So it will be only 1st September. If there is no more query, thank you for your patient hearing. Thank you.